Core concepts. What is inheritance tax, IHT? IHT is a tax on the value of a person's estate when they die, and also on certain lifetime transfers of assets. Why does IHT apply to lifetime transfers? To prevent people from avoiding tax by giving away all their assets just before death. Transfer and gift. For IHT purposes, the terms transfer and gift are interchangeable. The person making the transfer is the donor, and the recipient is the donee. Chargeable person is usually an individual. Married couples and civil partners are taxed separately. Domicile. A person domiciled in the UK is liable for IHT on their worldwide assets. Transfers of value. IHT on lifetime transfers only arises when there is a transfer of value, which is a gratuitous disposition that reduces the value of the donor's estate. Gratuitous intent. Poor business deals, for example, are not normally transfers of value because there is no gratuitous intent. Diminution in value. The reduction in value of the donor's estate is typically the same as the increase in value of the donee's estate, with exceptions such as unquoted shares. Types of lifetime transfers. Potentially exempt transfers, pets are transferred to another individual. Becomes chargeable if the donor dies within 7 years of making the gift. If the donor survives 7 years, the pet becomes exempt and is ignored for IHT. The value of a pet is fixed at the time of the gift. Chargeable lifetime transfers, CLTs, are transferred to a trust. A trust involves transferring assets to trustees to hold for beneficiaries. Immediately charged to IHT at 20% for amounts above the allowances and nil-rate band. Additional tax may arise if the donor dies within 7 years. The value of a CLT is fixed at the time of the gift. Tax rates and allowances. Nil-rate band IHT is payable when cumulative chargeable transfers over a 7-year period exceed this band. It is £325,000 for the tax year 2024 to 25. This has been the same since 2009 to 10 and is likely to remain until 2030. IHT rate on death, 40% is applied to a person's estate at death, chargeable pets, and when calculating additional tax on CLTs made within 7 years of death. IHT rate on CLTs, lifetime 20% on the amount above the nil-rate band at the time of the transfer. Residence nil-rate band, an additional band of £175,000 is available when a main residence is inherited by direct descendants, children and grandchildren. This only applies if death occurs on or after the 6th of April, 2017. This does not apply to lifetime transfers. Only applies to main residences, not let properties. Taper relief. Reduces IHT on pets and CLTs if the donor dies between 3 and 7 years after the gift. The reduction is 20% if the donor survives more than 3 but less than 4 years. 40% if the donor survives more than 4 but less than 5 years. 60% if the donor survives more than 5 but less than 6 years. 80% if the donor survives more than 6 but less than 7 years. Taper relief does not reduce the value of a gift for cumulation purposes. Transfer of unused nil-rate bands. Any unused nil-rate band on a person's death can be transferred to their surviving spouse or civil partner. The claim is made by the personal representatives of the second spouse to die. The amount claimed is based on the proportion unused, calculated using the current limit of £325,000, even if the first spouse died when the limit was lower. The residence nil-rate band is also transferable in the same way. Exemptions. Transfers to spouses, gifts to spouses and civil partners are entirely exempt from IHT, both on lifetime and on death. Small gifts exemption, gifts up to £250 per person per tax year are exempt. Annual exemption, £3,000 per tax year, can be carried forward 1 year if unused, giving a potential total of £6,000. Normal expenditure out of income, gifts are exempt if they are part of normal expenditure made from income and the donor maintains their usual standard of living. Gifts must be habitual to qualify. Gifts in consideration of marriage is exempt up to £5,000 if given by a parent, £2,500 if given by a grandparent or one of the couple to the other, £1,000 if given by anyone else. More complex aspects of inheritance tax. CLT preceded by a pet. If a pet becomes chargeable, it can affect the nil-rate band used for an earlier CLT, which makes IHT calculations more complicated. Grossing up. If the donor pays the lifetime IHT on a CLT, the value of the gift is grossed up to account for the tax paid. The annual exemptions are deducted prior to grossing up. Grossing up is not needed if the donee pays. 7-year accumulation period. CLTs made within the previous 7 years are taken into account when calculating IHT on a lifetime transfer, even if they occurred before the 7-year cutoff for pets. Advantages of lifetime transfers. Pets become completely exempt after 7 years. CLTs do not incur additional IHT after 7 years. Taper relief reduces IHT after 3 years. The value of pets and CLTs is fixed when they are made. Tax liability on death estate. Includes everything owned at the date of death, including life assurance policies, but excludes pension funds before 2027. Permitted deductions. Funeral expenses. Legally enforceable debts, including mortgages. There are no exemption for cars, ISAs, savings certificates, or government securities. To avoid life assurance payouts being included in the death estate, life assurance policies should be written to pay beneficiaries directly. The value of the main residence for residence nil-rate ban purposes is after deducting any outstanding mortgage. Payment of IHT. CLTs. The donor is primarily responsible for IHT, but the donee may pay. Due dates depend on when the gift is made. The donee is responsible for any further IHT due if the donor dies within 7 years. Pets. The donee is responsible for any IHT due if the donor dies within 7 years. Death estate. Personal representatives are responsible for IHT, due 6 months after the end of the month of death. IHT is usually paid out of the non-exempt residue of the estate. IHT planning. Make gifts early to increase the chance of surviving for 7 years. Use the nil-rate band. Make gifts to trusts up to the nil-rate band every 7 years. Skip a generation. Gifts to grandchildren can avoid a further charge to IHT when the children die. Residence nil-rate band. Leave the main residence to direct descendants to use the residence nil-rate band. IHT and capital gains tax. A lifetime gift can save on IHT, but can cause immediate CGT. Transfers on death are exempt from CGT.